All right, welcome to the weekly prep video for the week of October 13th to the 17th. In today's video, I'll be going over the action over the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like we do with every weekly recap video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. We'll start things off with the NASDAQ and the indexes. And market was kicking. It was roaring higher. And then we got the Trump tweet that 100% tariffs were going back on China. And the market did not respond well. NASDAQ down 3.5%. At one point, it was down another 1.5% after hours, which I actually think is a good thing. I think it probably peaks the fear after hours. And we do get some sort of a snapback rally over the next week. But this is some major damage to the indexes. I had to delete 4 support gaps on the way up. I've never had to do that since I've started tracking the support gaps. In one day, we went from all-time highs to after hours, we were at the 50-day moving average. But by the end of the day, we did close we closed between the 20-day moving average and the 50-day. And as a swing trader, personally, I kind of use the 20-day EMA as a risk on, risk off line in the sand. Above the 20-day EMA, risk on. Below the 20-day EMA, risk off. And this is a decisive change. Closing under the 20-day moving average, and in this manner, this isn't just like retail traders taking profits. This is some institutional selling. Now, whether that marks the top of the market for short term or for like a longer term correction, I don't know. We'll take it day by day. But this is not just like your run of the mill kind of sell off. This is significant. And we were in an acceleration phase. We've covered this on the daily recap videos multiple times. We were in the acceleration phase of the uptrend where after a big move, you start to see uh, support at shorter and shorter term moving averages. So you had the support at the 50-day moving average on September 2nd, support at the 20-day moving average on September 25th, then the 10-day moving average on October 1st with the government shutdown, then pullbacks getting supported at the 5-day EMA and kind of intraday pullbacks getting supported. Everyone getting very bullish, the most risk on, the most speculative assets rocketing higher. And after an acceleration phase to the upside, you don't typically end that with just sideways price action. You do end it with an accelerated move to the downside. So this type of action, like this magnitude was not expected, but this type of action to end the uptrend is kind of what you would expect after the acceleration phase to the upside. S&P 500, similar action, losing the 5, the 10, the 20-day moving average, coming into the support gap here, just above the 50-day moving average on a closing basis. Obviously, not good action there. IWO, the growth stocks of the Russell 2000, also lost the 5, the 10, the 20-day moving average. So again, risk off versus risk on. This is now risk off to me. It's not a completely change in the trend until we see a lower high. So a rally back up, a lower high. And also another thing that I'm looking for to really kind of confirm that the trend has changed is an unfilled gap down. You really don't see trends change until you get an unfilled gap in the opposite direction. Going back to the NASDAQ, coming off the lows, we saw like the market bottomed on April 7th, but it didn't really become tradable until we got this unfilled gap up on April 22nd, where we put in a higher low, got the unfilled gap up, and then from that point, the trend actually changed. So that's kind of what I'm looking for on the flip side of this, where we'll rally back up and then get an unfilled gap down. Then we'll have confirmation of a lower high, an unfilled gap to the downside, and then the trend will ultimately change. ARKK losing the 5 and the 10-day moving average, still over the 20-day, so some really solid price action and some relative strength there. And then we'll take a look at Bitcoin here because I'm filming this on Saturday morning instead of Friday, so a little bit more information. We had that liquidation event on Friday. From there, we came all the way down to like 105, 107, something like that. Bounced up, it's trading around 112 right now. And once again, it looks like we make new highs and then we sell off. We make new highs and then we sell off. Until that trend changes, just expect a lot of volatility in Bitcoin. Ethereum, even weaker. We had a lower low, lower high, and then an accelerated move to the downside. That's trading around 3,800 right now. Getting into the industry leaders or the liquid leaders, actually some solid price action, some solid relative strength overall in these leaders. We'll go price percent change. Actually, let's do this by current week. So AMD, that was the strongest this week, up 30% after the ChatGPT or the, I think it was ChatGPT partnership. Really good move on Wednesday, kind of consolidation on Thursday, and then we did have some sell off on Friday, down 7.7% on a pickup in volume, but still just closed over the 5-day moving average. This, if the market doesn't like completely roll over and start a new downtrend, this is still a stock that I'm interested in getting into. I don't have a position just yet, but we'll see how it continues to show relative strength over the next couple weeks with this volatility. Rocket Lab up 14.4% this week, down 3.25% on Friday. At one point, this was up about 6.5% Friday morning. Eventually reversed, closed at the low of the day on a bearish engulfing candle on big volume, but still over the 5-day moving average, still over this gap zone. Pulling into this area like 6150 would be a spot of interest for me. Uh, but again, we'll see what the market brings next week. LEU, this was also positive on Friday at one point, eventually did reverse, closed at the low of the day. Again, still over the 5-day moving average, still up 5.9% on the week. But we have a couple leaders over their 5-day. NBIS, similar story, up 1.25% this week, only down 2.3% on Friday. It was on an uptick in volume. We did make new highs in reverse, but still some air to the 5-day moving average. That's a great relative strength so far. KTOS, this had a character change on Thursday after the gap up, reversal, close under the 5-day moving average on a pickup in volume. So first warning sign after kind of frozen rope action, just rising above that 5-day EMA in a very structured manner. Friday, kind of closed right where we opened, but down 4% under the 10-day moving average. BE, I tried this trade on Friday through Thursday's high. It was working for a little bit. And then with the market just rolling back over, decided to just take it off and go cash for the weekend. But still held the 10-day moving average, still held a close over the opening price. It was still positive yesterday, up 0.25%, down 3.8% for the week. But look at the decline in volume as we come into the 10-day moving average. Very, very clean action as we consolidate here. Tesla up next. One of the few leaders that dropped under the 20-day EMA on Friday. The other one is BABA, which we'll cover in a second. Little uppercut and failure of the resistance gap, then losing the 5, the 10, the 20-day moving average. Did bounce at the support gap. After hours, it came into the 400 level and held there. Right now, I think we ended like post market at like 408 or so. Overall, I don't think like the structure has changed. We've definitely had a sell the news event where um, anyone who bought like super late in this trend definitely got punished. But if you were buying correctly, like off the 200-day moving average or on the breakout here, still plenty of profit. Just overall, the market is starting to feel heavy. That was down 3.8% last week. Robinhood lost the 5 and the 10-day moving average, closed on the low of the day, and a big pickup in volume. We'll see if that gets supported at the 20-day. And then Alibaba also tried this on Friday before the Trump tweet came out, which obviously didn't help me. Got stopped out basically immediately on this. Usually, when stocks make new highs and then come into their 20-day EMA for the first time, that's a good risk reward spot. And we had a gap down to manage risk against. So we gapped down, reclaimed the 20. That was my buy point. And then my stop was the low of the day. Got stopped out pretty quick. Obviously, not a winning trade, but a trade that I would take again because Chinese equities, they were looking really solid. And then some news driven price action stops you out. Can't argue with that. Can't argue with price. Always stick to your risk management. I probably will replace Baba with a different name come Monday, depending on how things shake out over the weekend. Just because the market has been strong enough. There's a couple emerging themes that I'm looking into. So Baba, Tesla, if they don't respond and they stay under their 20-day moving average, we'll replace them. Next, we'll get to the industry ETFs. We'll just sort this by price percent change current week. First one, NLR. This is the nuclear and uranium themes. Had incredible strength for the majority of Friday, eventually the market weakness was just too overwhelming. We closed down 0.4%, but still over the 5-day moving average. We were consolidating over the 5-day all week long after a push on Monday. Ended the week up 3.7%, which compared to the rest of the market, very good strength there. So we'll see if this is like the top and then we go into a correction, or if we can consolidate here, the market bounces on Monday, and then we could get some stronger price action. XME, this is the metal and mining ETF, up 3.4% this week, even with Friday being down 1.45. I thought Thursday was the top, and then we made new highs on Friday, but another reversal day on a big pickup in volume. This has been going literally straight up since April 7th, so some type of basing makes sense at this point, whether we get that or not, and whether it comes at the 10-day, at the 20-day, wherever it is. I still think it's a group that, after some consolidation, after pullback in a base, will be something to focus on, but you don't need to be the first one back in the pool right away. Biotech ETF XBI up 1.3% this week. Really good price action, still over the 5-day moving average. And this was a theme that emerged later in the trend. And if you go back and study like previous market cycles, stocks and themes that emerge late in the trend can be the next group of leaders after a correction. So even though the market is down, and even though we might be entering a down cycle for like the indexes and growth stocks, how biotech reacts over the next 3 or 4 weeks, does it show relative strength? Does it build higher lows? That is going to be some like really good information for us to take into account, because when we do enter back into an uptrend, this is going to be a theme that I'll be focused on if we have that relative strength phase throughout a correction. If there is a correction, right? Friday was one day, it was very ugly. It seemed like a change in trend, but we'll take things day by day. ARKG, this is the genomics ETF, up 1% this week. Very similar to the biotech theme. I think this is something that it was starting to catch on late in this upcycle. After a correction, this is going to be something that I'm going to be laser focused on coming out of the correction. I think it's a theme that can work. Um, this really strong action on Wednesday, up 7%. Inside day on Thursday, down 1.5, and then down 4% under the 5-day moving average. But we did bounce at the support gap at the 10-day moving average so far. We'll see if that holds. XLP basically flat on the week. This is consumer staples, and this honestly feels like we're entering stage 4 for it. We had a stage 2 uptrend for about a year, stage 3 topping phase for about 10 months. And now we're below all the key moving averages. All the moving averages are in the wrong order in a downtrend. And we tried to get going on Friday, reversed, closed at the low of the day, even though it was basically flat on the day. Blockchain ETF, bearish engulfing candle on Friday, ending the week down 0.3%. This was down 5.4% on Friday, losing the 10-day EMA. Just a lot of volatility here. Again, like if you're a day trader or you're a very short-term swing trader, oh, Deep, you got an update. If you're a very short-term swing trader, this type of market is something that you want. You want this type of volatility to buy the dips, sell the rips. But if you're a longer term swing trader or a position trader, this type of volatility is something that you could just take a step back, size down, really work on your trading processes instead of trying to make money in the market, and wait for a market environment that's going to favor your system instead of forcing trades in a market that's really picking up some volatility. FDN, this is the internet ETF, losing the 50-day moving average along with the 5, the 10, the 20-day. Obviously, not good price action. We'll see if this is just an overall higher low. We would need like a gap up and some strong price action next week. But so far, like one candle down. This, again, I use the 20-day EMA as kind of risk off, risk on for the indexes, for the individual stocks, for ETFs, and this is under the 20-day. IYZ Telecommunications was at all-time highs, closed under the 20-day EMA, down 1.5% last week. Cybersecurity, this is a theme that came on later in the uptrend as well, so maybe something that can lead us out of the next correction. But for now, lost the 5, the 10, the 20-day. Still could be a higher low if we can like hold the support gap, kind of build out. But for now, under those key moving averages, down 1.6% for the week. ITA, this along with metal and mining really led the cycle off the lows from April 7th. Started to see that acceleration phase and then two big sell bars Thursday and Friday. Thursday losing the 5-day, Friday losing the 10 and the 20-day EMA. Not good action here, down 1.7%. Gold mining ETF, there was some rotation from the high beta stocks into gold miners and in gold just because it's a flight to safety. So we saw some relative strength on Friday, being up 0.2%. But very similar to the indexes, if this trend is going to change, we'll see a rally, a lower high, and then an unfilled gap down. Until then, like this still seems like it's an uptrend. It's still over the 20-day EMA. So don't want to argue with price. Only down 1.7% last week. XLV, this is the healthcare ETF. This is another one that came on kind of late in the cycle, getting over the 200-day moving average in a big way with some big volume. Then got tight last week until Friday, losing the 5 and the 10-day moving average. This is still in a stage one base. So as the market goes through a correction, can we see some relative strength here, building higher lows while the market builds lower lows? We'll see. It's something to keep track of. TAN, the solar ETF, really looked like it was getting going on Thursday. We saw ENPH, one of the largest holdings of this ETF, looked like it was putting in a higher low off the 50-day moving average. I posted on Twitter, basically top ticked it, and then that broke to the downside. Solar stocks as a whole, TAN losing the 5 and the 10-day EMA on some big volume. But again, like this could just be a higher low shakeout. We'll see. Still over the 20-day moving average, so that's still risk on in my eyes, but down 2.2% this week. Software ETF, I think this was a good tell for the market because we software stocks usually are good for like growth stocks in general. Good shakeout on Tuesday, inside action Wednesday, Thursday. After that type of shakeout, the really low volume tight days here, whichever way we were going to break was probably going to be how the market was going to trend. And we had the head fake up and then eventually resolved to the downside, losing the 5, the 10, the 20-day on big volume, coming into the support gap, into the 50-day moving average. So not good action there, closing at the low of the day. XLF, the financial ETF, this was another kind of warning sign that we were tracking. This had a support gap that it was bouncing off of. Where is it? It was bouncing between the support gap and the 50-day moving average and the resistance gap overhead. We said which way that was going to break was going to be an indicator for the overall market. Unfortunately, it broke to the downside, losing all those key moving averages, closing at the low of the day on just enormous volume here. We'll get into the earnings after the ETFs, but a lot of banks will be reporting earnings next week. So we'll get some more feedback from financials next week. XLB, this is the materials ETF, losing the 200-day moving average on a big pickup in volume. Not a good sign overall. Semiconductors, highest volume since the lows in April, and it's on the way down, losing the 5, the 10, the 20-day moving average. We had a just phenomenal acceleration phase, but acceleration phases, they don't usually tend to end with consolidation. They tend to end with acceleration to the downside. And that's kind of what we felt on Friday. With like, regardless of what you think the market is going to do, you have to expect a lot of volatility. Like this type of daily bars, they don't resolve with volatility just disappearing and then a nice clean uptrend starting again. Even if we are like just putting in a higher low here, it's going to be some pretty volatile action. MSOS, the cannabis ETF, rejected at the resistance gap multiple times. I was still pretty bullish on this until we got the action on Friday, losing the 5 and the 10, closing right on the 20-day moving average. This is very news driven, whether or not cannabis gets rescheduled. So some of the technical analysis on here it's not as impactful as the other groups, but you do want to see like this continue to put in some higher lows, which it could still be doing. Like we had the low at the 50-day. This could be a low on the 20-day, and then we could start like that acceleration phase to the upside. But down 7.8% on Friday, down 3.7% for the week. Robotics ETF went from new all-time highs on Thursday to losing the 20-day EMA in very quick manner. Another sign of risk off. XLY, we've been talking about how the average consumer, the average American, has just been really struggling in this economy, and it's starting to show up in the stocks that align with the average consumer. Consumer discretionary was at highs, put in a lower high, lost the 20-day moving average on Tuesday, couple tight days, Wednesday, Thursday, then accelerated down move on Friday, losing the 50-day moving average, down 3.8% this week. Transportation ETF could not get over this resistance gap on a closing basis, resolved to the downside, losing the 50-day. XLE, the energy ETF, I was really hopeful that this was breaking to the upside and going to be like another group joining the rally. Unfortunately, that was not the case. We came into the resistance gap, and what you don't want to see after you come into a key zone, whether it's a previous high, a resistance gap, round number, key moving average, you don't want that to follow with an unfilled gap down. And that's exactly what happened 2 days in a row. We tested the resistance gap to the top, could not get over it. Weakness on Thursday, follow through weakness on Friday, losing the 200-day moving average. Just not good action, down 4%. TEJ, entertainment and leisure ETF. Again, average American just really struggling here. Losing the 50-day moving average on Tuesday. Now just in an all-out sell-off. Whether we bounce here or not, this will need a lot of time to restructure. XRT, same type of theme. Your average retailer not doing well, losing the 50-day moving average on Tuesday, inside day Wednesday, follow through Thursday, follow through Friday in a big way. Was really hopeful we were coming out of like a bigger base at this point, but now it looks like a test of the 200-day moving average as a higher low would kind of make sense, and maybe we can find some support there and build out another base. But this isn't the start of a new uptrend. ITB, Home Builders ETF, just massacred last week, down 8.6%, all the way down to the 200-day moving average. This was another group I was really hopeful for because we were seeing massive accumulation bars off the low. But eventually, when did the trend switch to a downtrend after an uptrend? With an unfilled gap down, with another unfilled gap down. Look for those unfilled gap downs on the indexes on other themes now to kind of confirm downtrends are beginning. That's how we started with ITB, and it's been pretty brutal. Bounced at the 50-day for a little bit, but then gap down, tons of volume coming in. So for this trend to change, we want to see the opposite. We want to see an unfilled gap up and that to hold. And then the worst theme of the week, Chinese equities, KWEB down 9.9%, losing the 50-day moving average. On a weekly basis, this is just like a breakout retest. So there's a chance, like we know Trump and how he negotiates. If he tacos on this deal again, then maybe this was the breakout retest into that kind of 20-week EMA, into the 10 or the 50-day moving average. We'll get a gap up. But still, this is a lot of damage off the highs here. We would want to see some rallying, pull back, a higher low to build, and then confirmation of the upside before I'm going to play some Chinese equities again. Before we get into the long and the short setups, we have some exposure numbers to go over. NAAIM active investors. Their exposure level never really got to the overheated levels. We did get to 98% in August, which at at that point, like it did get kind of tough to trade equities for about 2 weeks until that exposure level dropped to 81%. And then we had an awesome market from September 3rd up until yesterday. But we never got over 95%, which is something that I was looking for, like just pure capitulation of everyone who had been waiting for like the rally to snap, eventually capitulating long before we got a top. And with the leaders acting relatively well and with exposure levels still not like capitulating to the upside on this move, it kind of feels like this isn't an overall top to the market. It doesn't feel like the start of a bear market to me. It feels more like we go back to the NASDAQ and we go to 2020. I've been using 2020 as a comparison for a very long time in this uptrend. And what it feels like to me is kind of this September move where we had an acceleration phase, like we got supported at the 20, 20 again, then the 10, then the 5, and then that accelerated move up. Although we didn't accelerate as much in the NASDAQ this time around, I don't think the correction will be as steep this time around. what happened was we saw volatility like spike here on September 3rd to the downside, down 5%. We were down 3.5% on Friday. But something like this, where we actually go through a correction and a constructive basing on the indexes before the next leg higher, is kind of what I'm thinking here. Like we had enough emerging themes late in the cycle that could show relative strength, could have money rotate into it where it's not like, okay, that's the market top. We also didn't see as crazy action as we did in February of 2021, like this time around. So I don't think that this is like the top of the bull market, but I do think that we'll have to go through a very high volatility period for a couple of weeks, build some higher lows, have some tight price action, and then really like once we got the higher low and the wedge pop on November 4th, things got very easy to trade from November until that February high. And even though the indexes went higher, like February was the top of growth stocks of those speculative assets. And that's something that I could see the market doing. Like correct for like 5 to 8 weeks here, couple months, have a really strong move, a pure blow off top, and then go into a bear market. Now, I could be wrong, and we're going to take this day by day. We're not going to try to predict every single wiggle in the market. We want to let the market kind of guide us into positions, out of positions. But studying the 2020 market has been really has helped me a lot, like stay in the market up until this point, and I'm going to keep using that comparison until something breaks. We are getting into earnings season, so know what stocks you own, know when they report earnings before you put on a new position, know when they are going to report earnings. Talked about banks earlier in the stream. A lot of banks reporting kind of earlier in the week and on Friday. We do get our first semiconductor stock, TSM, reporting Thursday before the market opens, so that should be some good feedback. Um, but we are entering a period of volatility with the indexes really expanding those daily bars, and we're entering earning season. So just expect a lot of volatility. If you're a short term trader or a day trader, this is your market. This is your time to shine. If you're a swing trader, position trader, this is your time to take a little step back, do some more research, and preserve until the market kind of enters a period where it's most conducive to your strategy. Getting to the long setups, we got 10 long, 10 short setups. First one is Tesla. I did cut this on Friday just because I wanted kind of like a mental reset as well. But I don't think it's overall like broken here. Because we do have two gap downs, it's not something that I want to buy on strength. It's something that I want to buy on a shakeout. And the spot that I'm watching is this support gap right at like 410. So if we get a little rally, like a day or two rally, and then come back into this area at 410, that's a spot where I may look to like get in or just use as market feedback. You don't have to take every setup that you're watching to get market feedback. But how we respond to this like 410 level is going to be pretty important. The other level that I would be watching is the 400, the HVC from September 12th, very strong price action candle. So two kind of areas of interest. This also has earnings. I think it's on the 22nd. Yeah, 22nd after the market closes. So be cautious of that. Next two are kind of crypto related. Coinbase, this was heating up a little bit later in the cycle, so it may have the potential to lead after this correction. Touched off the resistance gap. Again, anything that has overhead resistance gaps, I never want to buy on strength. I want to buy on weakness. And what I would be looking for is an undercut of the 20-day, undercut of the low on Friday, and the support gap at 346.20. That would also be kind of like a breakout retest down here. BMNR, once again, just gets rejected at the resistance gap. That's why we draw them. We don't want to be buying a new position into resistance where we have evidence that sellers are lurking. We had a resistance gap confirmed on Friday after the Thursday gap down, but I do like how this is kind of building out higher lows. We have the low on August 1st, the low off the 200-day moving average September 5th, the low at the 50-day moving average September 26th, and we have a 20-day, or sorry, we have a 50-day moving average and support gap here right at 50.76. Loosely reminds me of the SMCI setup back in 2023, where it came into the 50-day moving average and a support gap for the third time before eventually breaking to the upside. So if the market is going to go higher and we fix things with China right away over the weekend, crypto gets this huge liquidation, and now we start to build higher lows. This is going to be a spot that I would watch BMNR at as a potential entry. Wouldn't be something that I would size up a ton just because I do kind of feel like we're starting a down cycle, but a spot to watch. CrowdStrike, we talked about cybersecurity starting a little bit later in the trend. Uppercut and fail at highs and the resistance gap on Friday. Just looking for a first test of the 20-day EMA and the support gap down at 481, 4140 as a potential buy spot. HIMS, we covered healthcare and healthcare related stocks as a group that was emerging later in the trend. This put in a higher low on the weekly chart on Friday. Obviously not great action losing the 5, the 10, the 20 day, but down 7.4%, still above Friday's low after the bad news that came out where Costco was selling some of the weight loss drugs. And overall, like the stock does keep getting supported at the 200-day moving average. It has this big base here. If the market isn't starting a new downtrend, this is still a theme that I would be looking at. So either a pullback into the gap at 50 to 60 area, or similar to the entry on Monday, where it's an ugly close followed by a gap up, buyable versus Friday's low would be the trade there. MP, this is one of the groups that was showing great relative strength on Friday because of the Chinese kind of argument, whatever you want to call it, still building higher lows. So came into the 50-day, got supported, came into the 50-day again, below a little bit, but right around that area, got supported at a higher low, pulled in on Wednesday, followed by two unfilled gap ups. So some quiet relative strength there. And then on Friday, really took off up 8.4%. Just looking for a pullback into the HVC from earnings right around 74.50 as a potential spot. Otherwise, the two gap zones at the 10-day and the 20-day as well. PE squatted on Friday, but I would just keep this on your radar through Thursday's high as a potential entry. Stop at Friday's low, the 10-day moving average. If the market doesn't just like really rip to the downside, I think this probably does hit 100 before the cycle is over. But if this follows through and takes out Friday's low, it's probably time to rest. It has gone from $15 up to 96. Another theme that started to emerge later in the cycle was these aviation stocks. So Joby, which I was in until they did the offering, then I got stopped out. Still could be soaking up this offering, could be putting in a higher low, kind of coming into the 50-day. ACHR a little bit stronger, pulled into the 10-day moving average, bounced at that support gap, still acting well, no unfilled gaps to the downside. So in my eyes, trend has not changed. And this is building like higher lows on like a longer time frame too, into the 200-day, a little bit below the 200-day, but still well above the previous lows. So whether we get a correction or not, these stocks, if they show relative strength through a correction, would be something that I'd be pretty focused on. If the market doesn't go into a correction and we solve things over the weekend, that 10-day EMA support gap right at 1160 is the potential entry. CRISPR, this goes back to the genomics theme that I think is starting to emerge. Undercut and rally of the 10-day moving average in the support gap on Friday at 70.70. That same spot is the spot that I would be watching on more market turbulence. Otherwise, the 20-day EMA and support gap is a spot that I would actually like look to get in, even if the market is selling off a bit more, because this is like has been kind of consolidating for multiple months now. An emerging theme. Market's not like perfect at this point, but I don't want to buy anything on strength. Like if the market's going to correct, if the market's under the 20-day, I don't buy anything on strength. So a couple support gap spots to watch at the 10-day and the 20-day. CLPT, exact same thing. Huge action over the past couple weeks. Went from $12 up to $30. Massive, massive volume. Perfect HVC test. And then gap down, oops, reversal. Looking at this chart, like there's no reason why I should not have been in this on September 26th. Looking for a pullback into the 10-day and the support gap right around $25. Since it's right near a round number as well, I would let it undercut that too, undercut 25, reclaim that, then manage risk against the low from October 7th, which is 24.21. Now to the short side, first one, MSTR. This zooming out is like very apparently starting a stage four downtrend. If Bitcoin can put in like a stick save here and rip higher, I think this just like rallies and puts in another lower high, and this can still roll over. But you get this big move up, kind of a capitulation. Anyone who shorted in the hole after this, like already made a pretty distinct move down, they got their face ripped off. That's what the market does to people that short late or buy late. Rallied up through the 200-day moving average for one day, and then that uptrend changed with an unfilled gap to the downside, immediately lost the 50 and the 200-day moving average on October 7th, along with the 5 to 10, just massive selling off, down 8.7%. And now we're all the way back to lows down, like down here. I don't want to short it down here. I want to see a rally back into the 5-day moving average around that 320 spot. In a perfect scenario, Bitcoin can like really rip back and we could get a rally into the gap zone, into the 20-day moving average around 331. That is a spot that I would size quite a bit up into and then manage my risk against the 50-day. These quantum names, if momentum is leaving the market, I think they are probably done here. I wouldn't be trying to short RGTI. I think that's the strongest one. I always like I was talking about this in the Discord. Like, would you rather pitch against Barry Bonds on steroids, or would you rather pitch against a AAA ball player? Trying to short RGTI in a momentum market is pitching fastballs down the middle at Barry Bonds on steroids. I would rather short the weaker of the names. And because I trade mostly in my retirement accounts where I can't actually short individual stocks, IONQ has an inverse ETF called IONZ, which that's the only position that I held over the weekend. We do have our first unfilled gap to the downside on Friday, which is a signal that trend has changed. We rallied up into new highs, but weren't able to make meaningful new highs, meaning we stalled at that action and then followed through losing the 5-day, which is a sign that momentum is drying up, and the 10-day on volume on Friday. To me, it feels like IONQ is probably done making new highs. RGTI, I'm not as convinced because we're still above the 5-day moving average. We didn't take out Thursday's lows on above average volume, and it's the strongest one in the market. So again, Barry Bonds on steroids or like a professional player with IONQ. With this, I would be looking for a little rally on Monday back into the 5-day moving average. Like I don't want to short it in the hole after kind of a 4-day pullback. Rally it back into like 74, manage my risk against the high of the gap down zone at 77. But it is something that I would look to size into. And let's jump to I have QUBT as well. So if uh, if RGTI is Barry Bonds on steroids, IONQ is probably like an all-star. QUBT is probably your AAA player, right? Made new highs on August 3rd before the others. What did it do? And then actually, it didn't actually make all-time highs. It uppercut and failed exactly at a resistance gap, so sellers present. And earlier I said, what do you not want to do when you come into a key area? You don't want to see an unfilled gap to the downside. What do we get the next day? Unfilled gap to the downside. We tried to rally into that area on October 7th, rejected. So selling pressure is building on the way down. Inside day on Thursday, bearish engulfing candle on Friday on a pickup in volume. This is under the 20-day. So short, you want to short the weakest names. You want to, just like you want to buy the strongest names in the market. If you're going to play the flip side, you don't want to short the strongest names unless there's like a true blow off top. You want to short the weakest names, and QUBT is significantly weaker than IONQ. We are at a support gap here, so I'm expecting, and with the indexes flushing so hard on Friday, I am expecting a little bit of a bounce here. Rally it back up into $20. A little uppercut and fail of 20, that would be the entry. Versus the 5 and the 10-day moving average, right around $21 would be my trade. IREN, this is still like, I think a little early, too short, but We had the bearish engulfing candle on big volume. This sold off like crazy after hours. If we go into like a 5 minute chart, this came all the way down into the gap zone at 50.40 and then wicked into that area. So there are buyers at 50.40. We go back to the daily chart. Like this jumped 28% from low to high after hours. Just crazy, crazy action. So we had buyers here, so we don't want to short it into the buying zone. Let it kind of trade Monday, Tuesday, Wednesday, whatever. Look for a lower high rally point to manage risk against the all-time highs if you're going to trade that. Personally, I'll be more focused on like the quantum names, but IREN2, just like very extended in the short term. We had tons of volume coming in without much price appreciation, which is usually a sign of like institutions selling to retail, like later buyers. And that's usually a sign of a local top if you follow through to the downside. Again, this is still over the 5 day, so it doesn't mean that it's already topped. We had such a shakeout after hours that I wouldn't be surprised if we do have quite a bit of a rally. But to take out Friday's high, like I don't think that will happen. So that's where I would manage risk against. LIFE, this is one huge move off the lows from $30 up to 111. We have our first unfilled gap down earlier in the week coming into the 10-day moving average on October 7th. Shakeout to the 20-day, came back into the 20-day. Now just a break through the 20-day, right at 103 would be the entry. If we do get a market bounce Monday and we get another lower high, I think that would set this trade up even better. But we'll keep our eyes out for that loss of Friday's low, loss of the 20-day moving average as the entry point. Dave, this is a name that I said to flip a coin on, whether this was going to break to the upside or the downside. It's a name that's already made a massive move from $5 up to $280. Now this is starting to look a little bit more like a stage three top because we had what should have been the breakout like later in September. We lost the 50-day moving average. We rallied up and now put in a lower high at this point. Broke through like those key moving averages, closed at the low of this area. Would look for a little rally and then a break through Friday's low as the entry. Stop would be the 10-day moving average. MMYT, we've talked about like the average retailer. We've talked about the leisure and entertainment group starting to fail. This massive stage two uptrend, massive stage three top, multiple tests of a declining 200-day moving average. This is ready for the stage four decline. It is a slower moving stock, so very similar to SFM, which is a grocery store, like not the same theme, but had that stage two uptrend, had that stage three top, and then it didn't really get super clean to the downside until it took out the last support gap in the uptrend, which was down at 134. So we had this little gap zone. Once we took that out on a closing basis, September 15th, that's when price action got very linear to the downside, like from 130 down to 100. Very quick move for a lower ADR name. I think that's what MMYT is going to go through. Now, it does have earnings estimated on October 21st. Make sure like you know when earnings are to trade around it. But a close under this support gap, and this in my eyes, will start that stage four downtrend. And it should be pretty linear to the downside because we've had such a long time in the stage three top, institutions selling to retail, institutions selling to retail, and eventually we'll break to the downside. ARQQ, this is another quantum name that kind of made its move later in the cycle, but no unfilled gaps to the upside. So no like signs of institutional accumulation. Lots of volume right at the top, showing more likely than not a short-term top. Close under the 10-day moving average, where RGTI is still over the 5-day, so some relative weakness compared to the leader in the group. Just looking for a rally into the 5-day, right around that 50-30 spot to manage risk against Friday's high. DFDV, this had one last kind of rally into a resistance gap and then reversed, lost the 5, the 10, the 20, the 50, all in one go on Friday, down 12%. Look for a mini rally back into that 1650 spot, the 5-day moving average. And then as we re-lose the 50-day moving average, that would be the entry. Stop would be the high of the day. And then last, we have ZEPP. This is like a pretty thin stock, only trades $13 million a day. So position sizing wise, you would have to size this way down. But one of those momentum names from $2 up to $61 that on Friday, we lost 20%, losing the 5, the 10, the 20-day moving average. We have not had a down day like that the entire upcycle. This is a change in trend to me. And without any gaps for support, I think this very quickly goes down to the first one at $38, which is like from 50 to 38. It's about a 24% drop. And from there, like I think this unwinds very quickly down to this 200-day moving average. So you don't have to position size very high. This is an extremely high ADR name, but to me, like this trend has changed. It's something that I'll be looking to scale into. So that's the weekly prep video for October 13th to the 17th. We had a ton of volatility on Friday. Volatility like this doesn't resolve immediately, where we just go back to a nice clean uptrend on the indexes. Expect a lot more volatility if you're the day trader, swing trader, like short-term swing trader type. This is your market. Enjoy it. You've earned it. If you're a position trader, don't fight this. This is not the market environment that's going to be conducive to consistent trading. For me, I went cash. I have IONZ on, which is the inverse of IONQ. That's the only trade I have on. And we'll take this day by day. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Go Cubs, enjoy your weekend, and I'll see you guys on Monday.